Hi, this is our Forex blog for May 9th, 2012. This is going to be a relatively short blog because I'm doing a lot of testing on creating automated systems, and therefore I'm not leaving it this running overnight for our blog posts. Anyway, we statistically compare all the currencies to every other one, and we show the strength and weakness in green and red. Anytime it's at or above the dotted 80 level right here, it's extremely strong if it's green, and if it's red, it's weak. Underneath that way, the daily, weekly, monthly trends. And anytime you have strength in the dollar and the yen, you want to buy those versus the weakest pairs. You know, the Australian, the New Zealand, the pound today for the most part, and so forth. You want to buy the strong currencies versus the weak, and you want to sell the weak currencies versus the strong. So let's look at the Australian and New Zealand, which are one of the weaker ones, especially when a currency is underneath the hourly moving average. You're looking to sell it on any kind of a pullback. Now again, some of our tools only work live. You can see I just brought this up and it's updating itself live. There's a lot of different ways of trading. You can use support resistance like the hourly moving average, pivot levels. In this case, the previous day's low right here. Came back up there, couldn't get above it. Good place to sell when it breaks down right here at 83. You can see it came all the way down to 64. 20 pip win. Nice little pullback right here. Starts to come back down. You get short at 80. Comes down to 61. Another 20 pip move. Nice pullback right here. Short at 69. And when you start getting these counter trend signals, especially the big yellow circles, when it makes another wave lower, you can really look for counter trend trades. Draw your fibs on this last wave, and you might get into a counter trend trade here at my Fibonacci area. There wasn't much of a move up. It went up about 8 to 14 pips. You could get out of that trade at break even. You go long again here, maybe made 5 pips. Go long again here, make 10, 15 pips. And this is a nice 1, 2, 3 low pattern. When you make a lower low, especially when you get signals like this and this, the market's extremely likely to have a 30 to 50 pip counter trend move. When it goes down to the fib targets, good place to get in. 1, 2, 3 low is whenever it rallies up and can't come at least 50 to 62% of the way down of this move up, and that one didn't. It pulled back and went sideways by the breakout right here at 41, and it worked its way back up to the hourly up here at 70. That's a nice 30 pip counter trend trade there as well. Basically, our trading systems in a nutshell is new traders should focus on only trading the trends. Strong dollar, strong yen, weak Australian, weak New Zealand. You want to trade those against each other. Here's the Australian yen. And one easy filter is when the price is underneath the hourly, that's when you want to sell it. This one came up to the previous day's low. If you had sold this right here, you would have had a small loss. Shorted again right here, it pulled back 15 pips. Came back up and double top right there. You're short at 45. If you use our trailing stop, you're out at 19. That's a nice 25 pip win. And again, you're starting to get some major counter trend signals, so draw your fibs on there. You can always, look for counter trend trades right here. It goes up 15 pips. I usually like to wait for the counter trend move to be at or near our lower containment bands. These are reversal areas, and preferably at or near fib targets. So I probably would have got in here. It went up 15 pips. I probably only would have made 5 pips on that trade. It's kind of chopping around here. I probably would have went long here and lost 10 pips. And then you have another 1, 2, 3 low here. Comes down. Notice the statistical weakness. It gets less and less. Rallies up. And notice very little strength on the way up, but even less weakness on the way down. Beautiful 1, 2, 3 pattern with our statistical trend tools for confirmation. And then this, you got in here at 89. If you use our trailing stop, you're out at 14 for over a 20 pip win there as well. Here's the New Zealand dollar, which was also weak. And I'm always a little cautious of currencies that break from below to above the hourly. But once you have a double top right here, pretty safe trade right there. Pullbacks up, can't get above the hourly. These are small 10, 15 pip moves, 10 pip moves, sideways range breakdown right here. And notice how my Fibonacci profit target level I do each night that shows up on your charts. You don't have to spend 30 or 40 minutes doing Fibonacci analysis. What's the ultimate low? You probably will find that frequently to be the case. These are 2 fib targets, acted as support. It went a little bit lower, and you got a nice bounce off the euro dollar. The pound dollar right here. came down to Fibonacci retracement level. These are Fibonacci profit target levels, the second profit target level, especially when it's underneath the lower band. A huge 60 pip reversal off of that. Let me move this out of the way. This is our range chart. You can see this one found some support. This one did as well. And again, when they are underneath the lower containment band, they're much more effective. If the market's super weak like the euro, you know how strong the yen was. It was one of the strongest ones today. So you obviously don't want to be buying the weak euro at that time with a strong yen. The yen is stronger than the dollar. So therefore, you're better off, if you want to do a counter trend trade, if you think the market's down too much, you're better off buying the euro versus a dollar than the ridiculously strong yen. The pound was also weak today. You could have also looked for sells in the pound dollar. I primarily focus on sells that are underneath the hourly moving average right here in the middle, the gray line. So when it came up here, you might have gone short here. Went down 10-15 pips, more than enough to move your stop to break even. False breakout above, comes back down underneath the hourly, does a retest at the hourly. That's usually a great place to go short right here. And you can see the explosive 40-plus pip drop after that. Pull back right here where you would have lost probably 5 or 6 pips because it started to go your way. You always move your stop down. You would have got stopped out. I'm always hesitant to get right back in the trade, but it didn't go back above the previous day's high right here. And if you look at a range chart, there's certain patterns that we look for, one of them being a 3-bar pullback. Anytime you have a 3+ bar pullback, you know, the trend's clearly down here. You have one example of it right here that failed. This one right here would have been a break even, and this one right here led to a 50 pip drop.